For years, Tesla was the undisputed king of electric vehicles. But as of 2026, the crown has officially passed. BYD hasn't just overtaken Tesla in global sales, it's flipped them in revenue too. So that's why today we're stepping into the ring to judge the ultimate showdown, BYD versus Tesla. And most importantly, we're going to determine which one could actually deserve a place in your portfolio. My name is Nick, and you're watching Coin Bureau Finance. First up, we need to make one thing absolutely clear. Nothing in this video is financial advice. This is purely educational content designed to give you a comparison between BYD and Tesla. And if you want more deep dives like this, then make sure you subscribe to the channel, drop a like, and flick that notification bell as well so you don't miss the next one. Now, to understand where this war is going, you first have to understand the two men fighting it. And the best place to start is a specific clip from a Bloomberg TV interview all the way back in 2011. The anchor asks Elon Musk about a Chinese company called BYD. Musk doesn't just answer, he laughs and says, quote, "Have you seen their cars?" He dismisses them entirely, joking that their only goal should be to make sure they don't die in China. And that moment perfectly captures the difference between these two giants. On the one side, you have Elon Musk, the visionary, the showman, the guy who sleeps on the factory floor, not because he has to, but because he's trying to brute force a sci-fi future into existence. Tesla was born in Silicon Valley, built on the ethos of move fast and break things. And Musk's master plan was always top-down, build a sexy sports car for rich people, then use that money to build an affordable car for everyone else. By contrast, you have Wang Chunfu, whose story couldn't be more different. He was born in one of China's poorest provinces during the Cultural Revolution. He was orphaned as a teenager. His older brother and sister-in-law had to sell their jewelry just to fund his education. So he didn't start with PayPal money. He started as a battery chemist who borrowed $300,000 to open a workshop in Shenzhen. And this brings us to the two men's strategies, which were diametrically opposite from day one. While Musk would try to build the alien dreadnought, a factory so automated it wouldn't need humans, Wang looked at his balance sheet and made a different calculation. He realized that in China, labor was cheap and capital was expensive. Instead of buying million-dollar robots, he hired thousands of people to assemble batteries by hand. He used first principles just like Musk, but he came to a completely different conclusion. Don't automate until you dominate. What's more is that while Tesla was open sourcing its patents to, quote, accelerate the mission, BYD was quietly building a vertical fortress. One didn't trust his suppliers, so he decided to make all the parts in-house. I'm talking about the batteries, the motors, the lights, and even the dashboard plastics. So while Tesla was making headlines with the Model S, BYD was reverse engineering Toyotas and putting batteries inside of them. They were uncool, they were clunky, they were, as Musk said, not a competitor. However, that uncool vertical empire allowed them to iterate faster than anyone ever realized. Now, if you think this is just a battle about who can sell the most sedans, you're missing the point. This is a war between two completely different philosophies of what a car actually is. First of all, let's look at BYD. For years, Chinese cars were considered cheap, unsafe, and powered by stolen tech. But that era is dead, and BYD killed it with something called the Blade battery. Now, for those unfamiliar, most EV batteries are clunky blocks that look like bricks. BYD's Blade battery looks exactly like it sounds, long, thin strips. But the real magic isn't the shape, it's the chemistry. It uses lithium iron phosphate, which is cheaper and tougher than the nickel-based batteries Tesla uses in its high-end sedans. And to prove it, BYD did something called the nail penetration test. They literally drove a metal spike through a fully charged battery. A standard battery would explode into a fireball instantly. The Blade battery? It didn't even smoke. It barely got warm. And that safety profile, combined with costs that are roughly 30% lower than Western alternatives, is the moat that Musk is trying to cross. Moreover, BYD isn't just buying these parts, they're making them. They own the lithium mines, they manufacture the semiconductor chips, they even own the massive cargo ships that ferry these cars to Europe. And if you still think that they only make boring taxis, take a look at the Yangwang U9. This is their electric supercar that can literally jump off the ground, all four wheels literally in the air. It's a $200,000 flex designed to tell the world, we aren't just cheap, we are better. However, having the best body doesn't mean you have the best brain, and this is where Tesla punches back. While BYD is perfecting the manufacture of atoms, Elon Musk is betting the entire company on bits and bytes, the brain. And now you might be wondering why Tesla's lineup looks so old, and the Model Y looks basically the same as it did 5 years ago. And that's because Musk doesn't view the car as a machine. He views it as a platform for software. Tesla's 4680 battery cells are impressive engineering, sure, but the real bet is on full self-driving and the robotaxi network. The thesis is simple. If Tesla solves autonomy, a Model 3 isn't a $35,000 car anymore. It's a money-printing machine that drives itself while you sleep. That said, there is one area where Tesla still holds the higher ground: infrastructure. BYD recently announced flash charging technology, claiming they can add hundreds of miles of range in just 5 minutes. But the physics of this is terrifying. Think of a battery like a washing machine. You can stuff clothes in slowly and it works fine, but if you try to jam a full load in under 10 seconds, you're going to break the drum. And that's assuming you can even find a charger capable of that kind of power delivery, which, let's be honest, are few and far between. Meanwhile, Tesla has spent a decade building the supercharger network, which remains the gold standard for user experience in the West. It works, it's everywhere, and it doesn't require a physics degree to operate. So while BYD has won the war for the hardware, the metal, the batteries, and the supply chain, Tesla is betting that in the future, the hardware won't matter as much as the code running it. And before we move on, if you want to take more control of your financial future, one simple step is staying informed. And you can do that by signing up for our free weekly newsletter. While you're there, you can also check out our finance-related deals we've put together exclusively for Coin Bureau viewers. Just click the link in the description below or scan this QR code on the screen. It's completely free and the deals include exclusive bonuses, discounts, and promotions. Back to the video. Okay, this brings us to the battlefield where wars are actually won and lost, the sales figures. And this is where the story gets ugly for the American giant. As some of you may know, for the last decade, Tesla's strategy was scarcity. They made a few cool cars, everyone wanted them, and they charged a premium. But today, the market has shifted from scarcity to abundance, and Tesla is looking dangerously stale. First of all, let's look at the lineup. If you bought a Model 3 in 2018 and you buy one today, it looks basically the same. Sure, the lights are sharper, the cabin is quieter, but to the average buyer, it's an 8-year-old iPhone design. The Model Y, the best-selling car in the world for a brief moment, is also getting long in the tooth. Contrast that with what they call the China speed. While legacy automakers take 4 years to design a car and Tesla takes 5 years to release a Cybertruck that arrives late and over budget, BYD is launching new models every 18 to 24 months. They aren't just throwing spaghetti at the wall either, they are flooding the zone. They have the Seagull for $10,000, which is basically a premium city car. They have the Seal to fight the Model 3. They have the Denza for luxury minivans. And they have the Yangwang for supercars. The result? In 2026, the data confirms it. BYD has officially flipped Tesla in both volume and revenue. They are doing to Tesla what Toyota did to Ford in the 1980s, winning on volume, variety, and relentless execution. And frankly, this is starting to look like every Western executive's worst nightmare, the Nokia moment. In 2007, Nokia made the best phones in the world. They were durable, they had great battery life, and they were everywhere. Then the iPhone came out, and suddenly the Nokia wasn't just worse, it was irrelevant. In China today, consumers view Western cars, whether they're Volkswagens or Teslas, as dumb phones. They don't integrate with the local digital ecosystem. A BYD car is a rolling smartphone. It has karaoke built in. It integrates seamlessly with WeChat and TikTok. The screen rotates. It feels like a piece of consumer electronics. A Tesla feels like a piece of minimalist transportation. And to make matters worse, let's look at the margins. Historically, Tesla has commanded a profit margin that made legacy automakers weep. We're talking upwards of 15 to 20% per car, and that was their superpower. But today, the scary truth isn't that BYD is bleeding cash to win this price war, it's that they aren't. Because BYD controls the entire vertical stack, their margins are now essentially matching Tesla's. So they are winning the price war and they are making money while doing it. Now this brings us to the one thing Wang Chunfu can't engineer his way out of, geopolitics. Because while BYD is winning the volume war, the world map is splitting in two, and depending on where you live, BYD is either the new Toyota or a ghost. First of all, let's look at the global south. In countries like Brazil, Thailand, and Indonesia, BYD is dominating. In Brazil alone, they captured 70% of the EV market in late 2025. BYD has realized that the next billion car buyers aren't in California, they're in Sao Paulo and Bangkok. However, the story changes completely when we look at Fortress America. The United States has effectively built a concrete wall around its borders. As of 2026, the tariff on Chinese EVs stands at 100%, and that's not a typo. If BYD tries to import a $12,000 Seagull, the tax alone doubles the price. Add in the new 25% tariff on batteries and the bans on connected software due to national security fears, and the effective tax rate is closer to 145%. As a result, you're unlikely to see many BYDs on an American highway, at least not ones made in China. But here's where it gets tricky, because there is a loophole, and it's the size of a country. It's called Mexico. Under the United States-Mexico-Canada Agreement, or USMCA, cars made in Mexico can enter the US largely tax-free, and BYD knows this. And that's why, despite pausing their plans during the US election uncertainty, they are now aggressively scouting factory sites south of the border. Because if BYD builds cars in Monterrey, they become North American vehicles. And this has triggered a panic in DC, with lawmakers scrambling to rewrite trade rules to stop Chinese parts from leaking in. Even Mexico has started slapping 50% tariffs on Chinese imports just to keep Uncle Sam happy. And this brings us to Tesla's predicament. Tesla is safe inside Fortress America, but outside the US, the walls are closing in. In Europe, Tesla is bleeding. Sales crashed nearly 28% in 2025. Why? Because subsidies dried up in Germany and France, and frankly, Musk's personal brand has become difficult for many European consumers. In a market that values sustainability and collectivism, driving a car associated with a polarizing US oligarch has become a political statement people aren't willing to make. Which brings us to the final and most important question. Where should you put your money? First though, I'll remind you that nothing said here is financial advice. I'm just a guy on the internet comparing two very different beasts, and make no mistake, they are very different. Because if you look at the stock charts, you aren't choosing between two car companies. You're choosing between a value play and a venture capital moonshot. To begin with, let's look at the valuations. As of early 2026, Tesla is still trading at a price-to-earnings, or PE ratio, of well over 200, and that is astronomical. It means Wall Street isn't valuing Tesla as a car manufacturer, because car manufacturers usually trade at a PE of 5 or 10. They are valuing it as a big tech AI company. In other words, if you buy Tesla stock today, you aren't paying for the cars they sell now. You are paying for the promise that Optimus the robot will mow your lawn by 2030, or your Model 3 will someday turn into a robo-taxi that earns you passive income. On the other hand, you have BYD. Despite flipping Tesla in revenue and volume, BYD trades at a PE ratio of around 18. They actually pay a dividend. It's small, about 1%, But it exists, and Tesla pays zero. BYD is priced like a manufacturing giant that makes real things, sells them for a profit, and reinvests the cash. It is the definition of a value investment. However, value comes with a catch. Investing in BYD is harder than it looks. Most of you watching this can't just buy BYD on the NYSE. BYD primarily trades as H shares on the Hong Kong Stock Exchange. Sure, there are over-the-counter tickers in the US, but the liquidity there can be quite limited, and you don't have the same shareholder rights. And what's more, Warren Buffett, the ultimate value investor, loved BYD. He called Wang Chunfu a genius, but in 2024 and 2025, he sold the majority of his stake. Not because the business was bad, but because of geopolitics. He explicitly said he didn't like the risk of having capital trapped if tensions over Taiwan boil over. Tesla has what we call key man risk. If Wang Chunfu steps down tomorrow, BYD's factories will keep humming along without much panic from investors. If Elon Musk steps down, or tweets something that gets him in trouble with the SEC, or just decides he's more interested in sending rockets into space, then Tesla's stock could collapse overnight because the entire valuation is tied to his personal brand. And in 2026, the brand is volatile, a double-edged sword that investors in BYD don't have to deal with. So, what's the final verdict? Who actually wins? Well, if you look at the scorecard, the answer is nuanced but clear. In the battle for hardware, volume, and profitability, BYD wins. Wang Chunfu has built a vertical fortress that can pump out better batteries and cheaper cars faster than anyone on Earth. They are the new Toyota. However, for the battle for software, brand, and the American market, Tesla still holds the crown. The picture might be murky right now, but Tesla is betting everything on robots and AI. And if that gamble pays off, it could change the world in a way a cheap sedan never will. Ultimately, it comes down to what you believe. Do you bet on the engineer who mastered the atoms, or the alchemist who is trying to master the code? I'll leave the decision up to you. Now we want to hear from you. Is BYD's hardware dominance the start of a new world order in auto, or is Tesla's massive bet on AI and robots about to pay off and leave everyone else in the dust? Let us know your thoughts in the comments down below. And if you want a deeper look at the geopolitical tensions that forced Warren Buffett to sell his stake, specifically regarding Taiwan, you can watch our full breakdown in the video right over here. As always, thank you very much for watching, and I'll see you guys again soon. This is Nick, signing off.